Okay, update on the broader markets here. Definitely wanted to give an update here, given the bloodbath. I mean, my God, we'll start with the S&P 500. This is the daily chart. I mean, when you think about the phrase waterfall decline, this is what you would see in the dictionary. I mean, like this is great. Like look at the gaps, right? So we gapped open, then just close on the lows. Another gap open. We don't actually close on the lows. We did get a little bit of a rebound. But like this is a waterfall decline, which means we're going to get some kind of squeeze, right? So like something like, you imagine, not clear what levels it starts from, right? But something like that, right? Like boop, and then we'll make our way down to new lows, right? But you got to expect that this is going to come. It's a question of how high it gets. It's the same way that this came and then like we had this little, you know, this looked like a bull flag. I mean, we had this little move up, then we consolidated, and then just whammo. So it's day 21. Know that we've had daily cycles, in the 22 to 25 day range. So we could totally get some kind of daily cycle relief. You could even see a world where we actually get a daily cycle low with the FOMC meeting. That would actually make a lot of sense, right? Because tomorrow is going to be day 22, and then Wednesday would be day 23. So you imagine we make a new low on Wednesday, day 23. Maybe that gives us a bounce for at least a few days before rolling over into another daily cycle low. That's my favored scenario. Not a prediction, a scenario, something to watch for. And if you look at the weekly chart, we are on week 16. So there was a point where this was a swing low, looked awesome. There were people calling in a potential ICL, but it didn't make sense given the timing, right? Like this would be a really early ICL at week 11, and just completely based on price action, not really even categorizing the price action with cycles. After this kind of humongous waterfall decline, you wouldn't expect another move just right up to make new highs. You'd expect a lower high. It'd just be a question of, do we also make a lower low, or do we maybe even consolidate around here? We have our answer now. We made that lower low. We went below here already. Now, at week 16, we could easily like overstretch ourselves in terms of downside and end up with like an early weekly cycle low that's like, week, even before week 20. It's totally possible. This is the time where price action becomes everything. And so if you imagine that if I think about that scenario, right? If we do get a daily cycle low on day 23 so the Fed meeting is on the 15th. So let's say we get that. So our new daily cycle starts on the 16th, and let's say it goes for, let's just call it 25 days. That would be like, this is where you're starting to think about how the daily cycles and the weekly cycles intersect. That would give you your low on June 22nd, which would be, the week of June 18th. So that'd be another 5 weeks. So that gives you a low around the week 20. That actually makes a lot of sense, right? So we get a bounce out of the FOMC meeting, day 23. It rallies for a little bit, and then we roll over, and then we make our final weekly cycle low, maybe somewhere in the 3,200 area is my sense. And so if we go to the monthly chart, again, important. I've been calling this out just around all asset classes. We made a major cycle low March 2020, and since that major cycle low, our top was month 22. So that, in the case of the S&P, was January, and we're now on month 27. So if you think about a 3-year cycle, that would suggest, and that would be 36 months, we may be on month 27 of a 36-month cycle, which already had its high on month 22. So we could have another 9 months of grindy action. I kind of call this out in the uranium update. But that's a very real scenario across really all assets. And so that's something that we have to watch for. We'll obviously watch the lower time frames to understand the daily and weekly cycles. But that's my preferred scenario. We get a local low on Wednesday, day 23. We bounce out of that. We get our lower high, maybe day 7, day 8. These are all trading days I'm talking. And then we begin our descent into the final weekly cycle low, late July. And then the bounce out of that, we'll have to watch closely to see if that's going to give us another bearish weekly cycle or something a little bit with some more sustainability. And if you look at the Qs, same idea. This is a monthly chart as well. Our top came on month 20, though. That was November. So same idea, though. So we could be in for a 16-month decline if you think about the math on that, right? So we have a 20-month rally, 16-month decline. These numbers won't be exact. I don't expect that we'll have a bottom exactly on month 36. Doesn't generally work that way. It's just a kind of general ballpark to give you a sense. And the Qs is the same kind of idea on the daily chart. Same count too. So we made our new low below the last daily cycle. And this was our last daily cycle on day 42. So we had already made a new low. That was your hint. Even while this rally was going and it looked convincing at times, that was your hint. They're like, oh, well, we had already kind of made this new low. That was like we had kind of broken ground there. And so that's day 21 on the daily. Again, I think the same scenario. So the Qs are interesting because it's actually only week 13 versus the week 16 of the S&P. But I could totally see a world where they bottom the same week and then they kind of realign their cycles. But I see a similar thing. We probably get a bottom, a local low on the 23rd with the FOMC meeting, and then we get a bounce out of that. This last one went into day 14. Probably don't make it quite to day 14 in terms of a high, but we'll have to see. And then finally, IWM. I've been calling out this is actually the strongest of the three because it hadn't made a new low on the daily cycle. We're now below that low. And again, just like the other two, or I should say in a similar vein in terms of thinking about relative strength, we still haven't actually made a new low yet. And now I think that's absolutely coming. This is going to get dragged down with everything else. But this is an interesting tell for you that like when we do get that longer term, that intermediate bottom, the IWM is probably your horse to ride. I mean, look at this man, this is just a painful consolidation for since the beginning of 2021. So, 18 months of just going absolutely nowhere. That's going to lead to some kind of explosion, but it's probably going to come after an explosion, sort of lower. Still need to fill this. We're still due to fill this gap is the expectation. And not to sound like a broken record, but same idea. We had our top on month 20 for this idea of a long-term cycle, and so the decline continues. This was a swing low, month 26. I don't think that's going to hold, as I said in my last video. We're on month 27, like all the other guys. And so that's the rundown.